Hey guys, welcome to another episode of Trading with Sina. So today we're going to do a full portfolio review. I'm going to be showing you guys what's in my portfolio. I'll also recap last week's performance. Last week we had a pretty good week. We went up 25% in our account for a gain of $32,000. And I'll show you guys how I did that and the positions that helped me got there. I'll also show you guys my open positions and what I'm expecting in those positions moving forward. Okay, at the end of the video, I'll also recap the S&P 500, the NASDAQ, and the IWM. So let's get started. All right, guys, so this is my account. So you can see here, September 2nd, we were 123,000. And then on September 10th, closing, we were at 155, 25% gain for a 32K gain for the week. When we look at our open positions, I have four $85 puts for 15,000. I have some Roku puts for 30,000. I have some Twitter puts for 19,000, and I have some Vuzi calls. The cost basis was 14, but it's actually worth 5, so we're down 8.8 thousand on those calls. So we got into some Apple puts as it was breaking out. Pretty bad trade. Lost around 14,700 there. Let's see what else here. I closed these Dell puts, but they were more negative, so we recovered some of these. The IWM, I lost 9,700, and essentially what happened was I made a decent amount of money with SPY puts, 15,000, and we closed this which was 17,000 or 18,000 down. These calls. So actually, with everything combined, this week was we locked in. So this is the realized. So we locked in $16,000 worth of losses. Let's see here. These are my open positions. So let's actually review each and every one of them. Okay, so Roku, we have okay. So let's look at it on the daily here. We've kind of closed below these four candles and we've kind of overtaken them. We have a negative EMA cloud, and this is apparent on the 4-hour, 1 hour, and the 15-minute. The target for these guys is somewhere around here, around the 294, 296, 294 spot. Our break even, it's 310 puts, and I bought them for $10, so the break even is around 300. They expire October 15th, so there's some time on it. Okay, so we'll see. I'm probably gonna I'm not gonna hold them on for too long, but we'll see how the trade goes. I'll probably take profit at 50% or somewhere along there. Next, let's review four. So these are $85 puts, which is the cost. The price of four is $78.73. So that means that they're in the money, and they're in the money by $6.30, which is exactly what I have them for. So essentially, the puts are all intrinsic value. Okay, so it's kind of like a pretty sweet position in my opinion. Probably where I'm going to take it is probably like around the 75 area is the next area of support. I'll look to take some profits there, and that will make our puts worth $10. So from $6.30 to $10, that's around, let's say, 67% gain. And then the next level of support is around 70, and we'll see the momentum and how it's carrying, and we'll see if we can hold it for till it hits that. If it's going to head lower, if we should keep it. So on the 4-hour, it's kind of negative EMA. It's trending down. On the 1 hour and the 15 minutes. And if you also look at the Heikin-Ashi for these guys, we can see that the momentum is clearly down. There's no sign for momentum change. And on the 4-hour, the 1 hour, and 15-minute, it's all kind of confirming a downtrend. Typically what happens is these candles are actually easier to spot a trend with. When there's a change in momentum, you kind of get one of these with a longer wick, but we have none of those. These are just full red bars, and we'll see if the momentum continues into next week. Okay, the next one is Twitter. So Twitter puts, same idea here. On the daily, it's negative momentum, 4 hour, 1 hour, and 15 minute. Okay, so we have green light on all 4 time frames. There are all 5 time frames there. And then on the regular candles, let's see, it's kind of coming into support. So, and we've taken out these 2 prior day lows, coming into support. Next area is around 58, and then 56 is kind of my target here. But we'll see if we kind of get into here and we hit some resistance. I might lock in those profits early. It's below the 50-day and the 20-day moving average. That's also bearish. The one thing that is a little bit concerning for this is that it is above. It's just heading into the 200-day moving average. We can see that 200-day moving average was a previous buy point, although it did dip below the 200-day moving average for a little bit. But there's a lot of institutional buyers that just step in at the 200-day moving average no matter what. If it's generally sloping up, if it's in a long trend. Twitter, I mean, it's a social media company, so it's doing well in this environment. And it's in the uptrend. So we might see some buyers step in here. So that's the only concern. But other than that, the 10 or the 20-day and the 50-day are downsloping and it's below them. So short term, it might be a little bit more bullish or bearish. Okay. Other than that, we had Roku as well. Okay, Roku took these 4 days, took the lows out. Okay, so let's review the IWM puts. So the SPY puts that I had made a decent amount of money on. Let's review that. So I actually took my profits here. I didn't catch these last 4 bars. This would have been very profitable for me, actually. I probably could have made another 14,000 if I would have held, but I kind of got, this was around 12:45 on Friday. I got kind of antsy. I had already made 14,000, so I just thought, hey, maybe I should just take my profits and be happy with that. But trading, you shouldn't get emotional. It's not really about the money. It's about following your mechanics, following the evidence. So I could have been up a lot more, and that doesn't mean that you should exit the trade. You have to follow the rules, follow the mechanics. And there was really no reason for me to be out of this trade at this point. On the 1 hour and the 4 hour and the 15-minute, all of them were below this EMA cloud, were negative, trending down. The high Kanashi candles as well were telling us a really good story, like just consecutive negative bars. And but I just took the trade and I sold it early. So a lesson to take away from that is just, don't take profits early. Just ride them out. Ride it out until the trend changes. If you're trading the chart, if you're doing technical analysis, don't get emotional. And I think what happened was I got a little emotional. Seeing a 14,000 gain, it feels a little bit good. So so I kind of got carried away and I didn't remain objective, and I should have done that. Same thing with IWM. I kind of sold it here, and then these 3 clouds, this would have been another like probably 10,000 gain that I left on the table. So it was just a good reminder to ride out the trend. I lost. So the on the Apple calls, I think I went over this in my previous stream. It's funny. I bought this breakout and just wrote it up. And then I sold it up here-ish, I think. No, I sold on the 7th. I sold on the 7th. So I sold it essentially at the top, my puts. And so I was kind of pretty like this thing was looking like it was just going to keep continuing. And then we have this like negative 3% move. So actually those puts that I had lost 14,000 on, they would have been, not only had the 14,000 wiped out, but they would have been in the profit. So I would actually made money if I would have held on. But the expiry was September 17th. I have a stop loss of 70%. If something goes against me 70%, I just take my losses and go home. This obviously didn't work out for me because this was like, so I sold it probably up here. I sold my puts up here. And that was like a 4.5% move. That is a ridiculous move, by the way. Like that is completely unaccounted for in the options pricing, and just I think it's probably more than a 2 standard deviation move. So it was like probably a 1 or like 3% chance that it was going to happen, and the 3% chance it happened. So can't predict it. The only lesson that I take away from that is, you have these, so I bought it here, you have a positive cloud, you have these bullish bars, and I just bought puts into this positive momentum. So don't buy puts when stocks are going up, okay? Or not even that the stocks are going up, don't buy puts when the momentum is so strong in clearly an upward direction. And to top it off, let's do a quick recap of the IWM analysis. So looking at the IWM, we have, let's look at the hourly chart. Okay. Next level that we're looking to, is 220 on the daily here. Let's get rid of this. Okay. On the daily here, we have a lot of levels. But on the daily here, essentially we closed below the 50-day and the 20-day moving average into 220. If this breaks, and it'll be pretty much a flush down all the way down to 215. We can reasonably expect that it gets here. So I might scale into some puts. I wouldn't be surprised if we get a little bit of a relief rally, or we don't, or we just continue lower. Depends. I think it depends what will happen. I still think that September is an extremely weak month, and the selling is not done. In fact, the selling is just beginning. So if you guys are concerned that you guys have already missed this move, really watch the charts. Watch to see if this continues. If there's a little bit of a relief rally, I'm going to be heavily buying puts still, because I still think that this market is headed lower. So just watch for that, okay? I mean, ultimately, I think by September 28th, we should hit 215. Okay, that's going to be my prediction. QQQ. Okay, so this broke to 378, which like if we kind of look here, like this area, 378.50, that was a really key area for it to break, and it broke below. We're probably going to be heading down to this 10-day, and then we're going to probably be heading down to this 370 level. We're going to hit the 370 level by September 28th. That's my official prediction. The QQQ has incredible strength. Like, people are so desperate to buy Apple, Amazon, Google, Facebook. They are so desperate to buy these stocks that this thing keeps heading higher. So we could have a really good defense of the 20-day moving average. The momentum indicators, so on the 4-hour, we're just starting to turn red, okay? We're not red yet. So like the other stocks that I showed you, they're already red. IWM is already red. SPY, already red. QQQ, not already red. So it is one of the ones that is probably the strongest. So if you're going to buy puts, be careful with QQQ. And then on the 1 hour, again, it's starting to be red. So typically this shows up in the earlier time frames. The earlier time frames will show a change quicker, but the data, the big data, is in the 4-hour and the daily, because that has huge volume. It's a lot of buyers and sellers that are confirming those data points, so it's more reliable. I trust the weekly chart way more than I trust the daily chart. I trust the monthly chart way more than I trust the weekly chart. It's just about data points. It's just about how many people are participating per candle. That's what matters. Okay, so then we're looking at the Heikin Ashi again. So this is looking negative on the 1 hour. On the 4 hours, just starting to turn red there, and this on the daily, it's above it, right? So we're gonna reach some heavy resistance in the QQQ before it heads lower. And the SPY. So let's get rid of this guy. These purple areas are kind of where I'm kind of predicting the periodicity of the falls, of the sell-offs, and it's kind of worked. Anyways, okay. 1 hour. Okay, so the 1 hour, we're bearish here. 15-minute, we're bearish. Daily, we are just starting to turn. And the 4 hour, we are also starting to turn. If you go into the Heikin Ashi, same deal, turning. Oh, that's the weekly. Beginning to turn, okay? So let's take that away. Okay, so for SPY, we might see a little bit of a relief rally. I'm not quite sure. So a little bit of relief rally here, maybe to the 448. and then probably going to head lower and touch 441. That's my prediction, guys. I think we hit this 441 level, and then if it's really bearish, we might break this level briefly and just touch here, and then we're probably going to resume higher. Okay, I think that we're going to hit this 50-day moving average again within the next 2 weeks. We'll see. This fib retracement level is a really strong area of support, so we might find buyers here, but ultimately I think we will test this 50-day moving average. All right, guys, that is all for today. Thank you for tuning in. And if you have any comments or suggestions on what tickers you want me to review, please leave them in the comment section below, and have a great rest of your weekend.